We're joined now by international economist Vicky Pryce, who we love having on Global Business Europe. Good to see you. Look, the government is talking about a decade of renewable, but if there was one economic test which will define whether it succeeds or fails, what's that?
Well, growth, I'm afraid, in the next couple of years, because, of course, then we're going to have elections. So for Andy Burnham, I think that's the most important indicator he'll be looking at. And, of course, how do you get that growth? You did already mention a few of the ways in which people might feel, better off, which is if the cost of living reduces or at least comes under some sort of control. And I think that's where they're focusing now to improve consumer confidence. The real question is whether businesses are going to feel more confident to produce that growth, which is so important.
He's pledged to spend more on infrastructure, on public services, and of course there's a lot of growing pressure to spend more on defence. Is there a credible way to do that within the fiscal rules? I suppose I'm wondering how flexible he's going to be.
Well, the fiscal rules do allow for borrowing for capital spending. So if you put a lot of the defence expenditure, which is due to take place, when assuming, of course, that is agreed between the Chancellor and the new Defence Secretary. Remember, of course, that the current Chancellor was the Defence Secretary until relatively recently. If there is an agreement on how, that money can be found, then it has to come out of capital spending, and that capital spending is allowed under the rules that exist now, because there are three rules really. First of all, that you only spend on current expenditure, in other words, the National Health Service, maybe support on welfare, from taxes that you raise, so you don't go out and borrow, but you can borrow for investment, infrastructure, for example, or HS2, which is that line which is meant to connect London with Birmingham, which is costing a huge amount. All that is allowed, but within all that, you also have to get your debt to GDP ratio to decline at the end of 5 years. It was originally 3 years now, certainly by the end of the Parliament. So you're constrained, but you can, in theory, borrow more if you want it.
The government's made such big promises, and yes, you're talking about that flexibility, but I'm wondering, because the markets are watching all of this closely, are investors convinced that the numbers add up?
Not yet. I mean, we have, as you suggested, seen this increase in 10-year yields, but they are happening everywhere because, of course, we have high oil prices, we have the war in Iran still, continuing, or resuming and then continuing, and things don't look like they're likely to be sorted out in a hurry. So those are still hanging over, those concerns hanging over the markets, and of course all that means higher inflation and higher interest rates. So against that type of background, it's very, very difficult to see what can be done by moving things around a little bit, or perhaps one of the areas that Andy Burnham, the new Prime Minister, wants to see happen, which is regions doing better, without some serious expenditure. I'm afraid since COVID in particular, what we've seen is that the cost of levelling up, in other words, seeing that the various regions across the country do as well as perhaps London and the South East, which have been outstanding by comparison to the rest, that has become now considerably more expensive. So there's a limit to what can be done, and certainly what can be done over the next couple of years.
I mean, how much wiggle room really does this government have? I mean, can it really pursue this much more ambitious economic agenda, or are they really at the mercy of bond markets setting the pace?
Well, they can influence the bond markets, because if there is a little bit more confidence, particularly from businesses, and they start investing, then that's going to be good news. And what you've seen already is that indeed defence stocks have done quite well, and the FTSE's gone up, in fact, today. That's the main index of big companies in the UK, which does suggest that there is something there. But unfortunately, the economy has flatlined since the end of the first quarter. Nothing much is happening. Nobody's really hiring lots of additional people. So we've got unemployment sort of steadying as well. So you haven't really had any big movement in any direction. Everyone's very, very cautious right now, and that's the real issue. The markets are convinced that there is going to be growth, and that growth will be able to fund some of the expenditure which Andy Burnham will want to see happen to make people feel better off, perhaps, or cut some of the taxes for working people, which is also a possibility. What they're looking at is maybe raising the threshold from which you start paying tax, which has been frozen for ages. But that, of course, means less tax collection. The markets will be looking at that and trying to recalculate what it means for those fiscal rules that you referred to earlier. So they will be watching out very, very careful. We won't get a budget to explain it all until hopefully early October, but still that gives us a couple of months of worry.
Vicky Pryce, thank you so much for that in-depth analysis.